We're constantly buying.
You're always both.
Yeah, we're always investing. We stay invested. We're not trying to time market cycles. When we have stabilized assets, whether it's in real estate or private equity, we look to sell if the markets are good. We have the benefit of controlling the sale. We're never selling when markets are bad. So after we've completed the mission, we look to sell our assets really no matter where we are in the market unless we're in a crisis.
You remember guys like, and it's totally different, but guys like Sam Zell just seem to know exactly when to dump everything. You never would do that. There's always a time to buy, always a time to sell.
No, I mean, there are moments we've bought things at the wrong time and we've been able to ride through it. And Hilton Hotels is a good example.
Right now?
Right now, I think we're toward the end of a capital market cycle for sure. I think the biggest risk is in valuations and mean reversion in global cost of capital rates, PE multiples. So I think we're later in the cycle, but we still see good opportunities across our various businesses.
So, Joe, you guys just did a big deal with Thomson Reuters.
Yes.
Kind of out of the sweet spot of private equity as you think about it. Talk a little bit about why you did that and how you have the capacity to do those kind of deals.
Well, I think it's right up our sweet spot, Maggie. It has elements of everything we're trying to do for our investors, manufacturing, unique opportunities at scale. In this case, it's a large corporate partnership with the parent company retaining a 45% stake. It's a corporate carve-out. It's a giant company, required $4 billion of equity. There's a lot for us to do to help improve the business, partnering with the parent company. They viewed us as a better, almost strategic buyer of the asset. And it's unique in our industry. I mean, there are few firms able to manufacture an opportunity like that for their investors.
Since we're on the topic and we're in the news business, I'm very curious what you think long-term is going to happen. I know you're effectively decoupling the terminal business from the news business to go probably straight at Bloomberg in a different way. How much do you think news matters, though, to that product? And do you ultimately think you're going to have to build your own news product to compete with Reuters?
No is the answer. News is essential. And Reuters, we are the distributor of the Reuters news.
Right. And you have a licensing deal for like 20 years?
I mean, it's really into perpetuity. I mean, maybe the term of the contract is 20 or 30 years, but that's essential to the data that we're delivering and to the value proposition to financial risk divisions. Well, it's Refinitiv is the new name of the company, Refinitiv's customers.
So there's a lot of uniqueness. You mentioned some aspects of the Thomson Reuters deal, but talk about you compared to other private equity companies, because there's a lot of capital out there to be put to work. What makes Blackstone unique?
Well, we operate at the large end of the market. We have 150 investment professionals, 70 portfolio operations executives. So our ability to act as industrialists is a big part of our differentiation. Our ability to manufacture really complicated acquisitions. We're not just buying things at auction that the investment banks are selling with complete transparency in the process. We're having to manufacture things involving public companies, taking big divisions off their hands, doing corporate partnerships, buying the whole of public companies. And that's complicated to manufacture. It's complicated to finance. And then after we buy the business, we have to do something with it to improve it. And we've built that capability over 15 years. So there's a couple of our competitors that are similar to us, but I really believe that we and a few are differentiated in the market, and our investors agree with that. They're giving us capital to invest at scale.